What's up? What's up? All right, welcome to today's daily trade review. All right, we're gonna start off on Mrs. Fiber. It don't look like much of a trade, does it? It is though. 91 pips. The exact level that I was targeting was 1.02100 and price tagged it, traded 12 pips above, and then started retesting. Have y'all noticed that though? Have y'all noticed that the areas that I be taking profit at is like, as soon as I take profit, shortly after it retests. That means we might be on to something. All right, so we're gonna start off on Euro USD, and I guess we'll start at the hourly chart. I mean, I don't really know because I wasn't available for New York Open and the 8:30 time when CPI numbers kicked off. I wasn't available, but I'll go over it anyway. There is two specific POIs right here. And obviously the first one is the buy side imbalance, sell side inefficiency here. The second one, and I think it's very important to highlight, is the weekly opening gap. And y'all always need to pay attention to the weekly opening gap because it could be sensitive to price later on in the week or on a Monday or Tuesday or Wednesday or Thursday. It don't matter. Like, just pay attention to that price. And I want to zoom in and basically throw a measurement on here and show y'all the sensitivity. These things are not coincidences. That's all I'm saying. Like, there's specific areas that are sensitive to price. This is the weekly opening gap, but it's also a volume imbalance. And if we zoom over here and zoom in, look what happens, right? Just pay attention to the sensitivity around these two blue lines. Like, we create the volume imbalance, we create the weekly opening gap, and it acts as support and resistance. Like resistance, broken, turn support type shit. All right, let's giddy up on over here. All right, so let's see. I see now this one faked me. I thought it was going down to fill in that imbalance maybe tomorrow. I think it tricked a lot of people. I don't know if, honestly, I wouldn't have been looking to go long right here. But just like yesterday, y'all seen, sometimes I be wondering how the ICT and see things and how stuff be so on point. It comes with repetition, you know? Like, I mean, he is a genius. I'll give him that, right? But just say you didn't understand, you never heard of ICT before. How long you think it's gonna take for you to realize that every day around 8 to 9 a.m. we get a pullback into a specific zone or area before price expands? New York Open. It's just time and price is everything. All right, so going back to the 1 hour chart, right? We have this 8 o'clock candle that kicked off the CPI numbers, and we got this huge expansion up. So going into this new hourly candle at 9, we was on the chart trying to find our way into this trade. So this 9 o'clock hour right here, we found our way inside of this 5-minute fair value gap. And that's where we decided to go long at. Everything is connected. Like the new hourly candle, when you are expecting a continuance, you want to see that hourly candle open, trade down, and then go up. So let's look at the hourly chart again and zoom in. And this is that 9 o'clock candle. Here's the opening price of that 9 o'clock candle. So we want to see price open, trade down, and then go higher. We're just trying to piggyback off of that volatility injection. That was the whole thing behind this trade. So once again, we open up at 9 o'clock. We have our POI. We trade down into that fair value gap, and then we expand. That's it. It's simple as that. I'm gonna drop down to the 1 hour time frame because that's what we were watching. It was a 5-minute POI, but we was on the 1 minute time frame. And we basically, I thought that big push up was Judas swing, as ICT calls it. I see what you're saying. I'll get into that in a minute. So this is our 5-minute fair value gap. We can basically narrow down that 5-minute fair value gap to this 1 minute fair value gap. And notice how price trades right down into it. You get the change in the state of delivery. This is essentially a volume, a balanced price range. The lower time frame, lower than a 1 minute, you would be able to see it maybe on a 15 or 30 second. You had that single pass down, digging into the fair value gap, that single pass back up, and then price digging back down into it. So we closed partials right here, right when price took out that high. I'll throw on the execution. We earned this trade a couple more times, right there, right there. Close partials, close partials, close partials. And on this trade right here, I got stopped out at break even. But on my live account, y'all seen right here, my take profit got hit right here at 1.021. And I'll show you what I was targeting on the daily time frame. So right here, you have relative equal highs from September's high and August's high. And you have a fair value gap right there. That gold box is our fair value gap. You want to zoom in a little bit and pay attention to the 3 Pacific levels inside of fair value gap. And there you are. And that 2100 level is right there. I guess I should have targeted this, but basically what I did was round it up. I should have rounded it up to 1.02200, which is right there. But I rounded down instead to 2100. But yeah, man, it was basically just a continuous trade. Institutional order flow entry drill on the 5-minute to catch a continuation to the upside. And the result was 91 pips. And it was a good risk reward for those of you who pay attention to that kind of thing. To be honest with you, Jay, nah, like, I don't think I'm going to be looking for lower prices next week. I'm hoping to get a reversal tomorrow. Maybe we can catch a little short scalp tomorrow to sell, to rebalance this. But hopefully going into Monday or Tuesday, we can find ourselves down in this area to go long. Because just like I was talking about on the DXY, I think we can officially say that this is a reversal. I mean, just check it out, right? This is a significant shift in market structure. I don't care how you put it. All right, so we got this very significant push down into a monthly fair value gap, right? We get a huge push up, which was typical for a retracement to continue lower, but we failed to make a lower low. Now, that I still wasn't convinced, because I know that typically we will trade down and then we will run out that high, just like we did here, and then continue trading lower. But the fact that we failed to make a lower low here as well, it just basically confirmed it for me that this really is that reversal that we've been anticipating. I mean, at this point, we have a low, a higher low, and another higher low. So now we just need to develop a swing low up here, and we need to determine, are we going to have to retest from this price leg down into this area, or are we going to retest this price leg down into this area? That's the question. Is it going to be from here to here? Anticipate lower prices down into here to go long? Or is this the price leg that we need to be paying attention to? And in my opinion, I think it's going to be this one. We just have to wait to see. But this definitely needs to get rebalanced. All right, so going into the week, I was wanting price to come down into here, and obviously it failed to do that. So I'm going to get into that during the weekly watch list, though. So let me get into GJ. Y'all pretty much already know what's going on GJ. This 4 hour fair value gap right here. I said pin and sell limit right here at this high. And it was basically a turtle soup setup to catch that reversal as soon as buy side liquidity is ran. We have a current dealing range right here, and it was literally to the pip entry. You don't find too many like that. And price dropped a good 250 pips from the entry. I'm sorry, 300 pips. I didn't realize that. And the sale that we're in right now is based on the 4 hour time frame as well. See the fair value gap, price traded up into it. It ran out buy side liquidity right here, and then had a strong push down. So on the way back up is where I sold from. And I'm hoping that we can catch the expansion down to at least take out this low right here. This is previous day's low. And when you have price trading so close to previous day's low, we'll jump on a daily chart real quick. Price is very close to previous day's low, right? If this is going to be a down close candle, then you want to anticipate this candle opening, trading up first, and then trading down. So if this is indeed going to be a down close candle, then you need to think about, after it opens, where will it most likely react from once it trades up? And if you get down on the 4 hour, you can see that this new candle, the new daily candle opened 3 hours and 30 minutes ago, roughly. So we got 1 hour and 50 minutes left on this 4 hour candle. So when this new 4 hour candle opened, that was when the new daily candle opened. And this is a logical area for it to react from, in my opinion. We could bounce back up in there and completely fill it in. If that's the case, then I'm gonna let the stop loss get hit because it's already a big stop loss. I'm hoping that it'll be just like an institutional order flow entry drill, kind of like what we seen here. Price digs up into it and then just runs for it. We was fortunate enough to get triggered in this sell limit right as that CPI read for the news event hit. It literally hit at 8:30, and during that 8:30 candle is when we got triggered. And from there, it didn't let up. And this was an opportunity to re-enter this trade. And right there, during the last hour or so of New York session, we dropped 157 pips. And that's pretty much it, y'all. I told y'all it was going to be a quick one. We only took 2 trades today. Y'all make sure to tune in the morning, and we'll try to see if we can catch some type of TGIF setup, or maybe even a continuation to the upside. It's kind of hard to tell right now, but I appreciate y'all tuning in. Good night.